The start of 2025 is turning out to be nothing short of historic for Bitcoin, with its price surging toward the monumental $115,000 mark or more. Bitcoin enthusiasts, investors, and skeptics alike are buzzing with speculation. Is this just another bullish wave, or is something much bigger unfolding? This surge isn't happening in a vacuum. Bitcoin maximalists are attributing the rally to a confluence of powerful factors. The incoming pro-crypto Trump administration is widely seen as a game changer. Policy whispers from Washington suggest a more favorable regulatory landscape for Bitcoin, possibly laying the groundwork for U.S. adoption at a scale we've never seen before. Add to that renewed chatter about Bitcoin becoming part of a U.S. strategic reserve, and you've got a recipe for market excitement. But that's not all. Analysts on platforms like X are pointing to a global wave of institutional adoption, fueled by giants like BlackRock and Fidelity championing Bitcoin ETFs. Samson Mow highlights that sovereign nations are quietly but steadily adding Bitcoin to their reserves, signaling a shift in how governments view digital gold. And then there's Michael Saylor, who remains resolute that corporate adoption is just getting started, with MicroStrategy continuing its relentless Bitcoin accumulation. On-chain metrics further bolster the bullish narrative. Glassnode data reveals an unprecedented decrease in exchange-held Bitcoin, with long-term holders tightening their grip on their coins. This supply squeeze, combined with surging demand from institutions and retail investors alike, is creating the perfect storm for a price breakout. So what does this all mean? Is $115,000 just the starting line? Or are we on the brink of a revolutionary era where Bitcoin cements itself as a global financial powerhouse? To break it all down, we turn to Samson Mow, CEO of Jan3, as he unpacks this explosive rally and explores its implications, not just for Bitcoin, but also for the role of altcoins in the bigger picture. What does Mow think of Ethereum? We will find out more. Before we jump in, don't forget to like this video, share your thoughts in the comments below, and subscribe to our channel for more timely crypto insights. Your support fuels the content that keeps you ahead of the curve. Thank you, and enjoy the video.
I'm very bullish on Bitcoin. I see Bitcoin as the ultimate end state, and that is what you're asking about earlier. What is hyper-Bitcoinization? Hyper-Bitcoinization is the point at which we don't convert back to fiat money. Similar to how you don't convert dollars to seashells anymore. You might buy a seashell for a decorative thing or a necklace, but you're not going to buy seashells and hoard them to store value, right? But the other part is, what is Bitcoin? And the answer is very simple. Bitcoin is simply money. So it is all of those things that you mentioned. It is a store of value. It's a medium of exchange, and eventually it will be a unit of account. And on some levels, it's already a unit of account. But what is a useless version of Bitcoin? I would say that is Ethereum. Ethereum is centralized. It's basically a central bank digital currency at this point, because it's just big institutions running the chain. So it's kind of defeated the purpose already. You don't have...
Is it similar to Ripple? Excuse me, just to understand, is that like similar to Ripple in terms of like centralization?
It's similar to Ripple, it's similar to FTT, it's similar to everything. So you have Bitcoin on one side of the spectrum, which is decentralized, permissionless, immutable, and then you have everything else on varying levels of uselessness, right? So, I think there are some cryptocurrencies that you could say are relatively decentralized, but for the most part, 99% of them, they're all masquerading as decentralized. They set up a Swiss foundation somewhere and they say, we're decentralized, but it's really Vitalik and his buddies deciding monetary policy. So you effectively have replaced the Federal Reserve with a bunch of guys, on a Zoom call that know nothing about money, deciding what money is. And right now, I mean, they're on a kick to make Ethereum sound money. So they're trying to implement monetary policy and make it more valuable, right? Like reducing the supply, burning fees, locking things up so that people can't withdraw from staking pools or whatever. But that can change. Like if you can change in one direction, you can change in the other direction, right? So when Ethereum price is high, they can say, well, we need some inflation. We're going to print some more. And this is totally within their power to do. And this is why a lot of Bitcoiners call Ethereum a shitcoin, because it's so malleable. They can change anything they want. It was hacked. There was a DAO hack. They rolled it back on the chain. And I believe that was the inflection point for them to just fail. They could have been.
Was also, I think that was the first like SEC investigation into anything crypto, if I'm not mistaken, wasn't it?
Perhaps, but I mean, Ethereum is really an unregistered security, and a lot of these things are unregistered securities, FTT included, but pretty much every crypto is an unregistered security. And this is why Bitcoiners try to distance ourselves from all those things, because they are trying to affinity scam and say, we're like Bitcoin, we're the same thing. And they want Bitcoin to be a subset of crypto, but it's actually very different.
Very interesting. And I'm super curious because actually prepping for this interview, I saw you actually did a podcast with Vitalik, and I didn't realize, now I understand whoever the host was, I can't remember his name, but now I understand why he got you both on that call. Yeah. So if I didn't listen to the whole thing, and now I probably will after this. I should have. I didn't realize it was such like a contentious podcast, but if you were going to say this to Vitalik, what's Vitalik's argument? Because that's a pretty bold claim. I've never heard this claim before, that Ethereum's a shitcoin. I've heard a lot of shitcoins are shitcoins, but not Ethereum.
Well, the thing is, every shitcoin likes to call other things shitcoins, and they think they're not, but they are. So I remember Do Kwon was like laughing at other things and saying, oh, they're all shitcoins, and they're gonna fail.
We know how that ended up.
Yeah, you know how that ended up, right? But Ethereum is just malleable. If you look at some of their early recordings of their meetups and things, they're talking about their ICO. I mean, that in itself is an indicator that it's a security, right? It's a effort by a group of people to make money and attract investment into their project. It's just that they don't have a company, right? But if you look at everything that Ethereum does, it's basically a company. A DAO is basically a board of directors, right? You're just saying it's a tokenized thing, and therefore it's not under the existing framework. But I think regulators and the CFTC and the SEC, they're starting to understand that a lot of that's just bullshit. Like, it's really a securities offering that you're trying to pretend is decentralized. And I think the time is running out for these guys.
Now, then that sort of, this is a great way to sort of dovetail into the thing that I alluded to earlier, which is smart contracts built on Ethereum. I've never in my life heard of a smart contract, which is, again, if Ethereum's the OS, and you're saying it's a centralized OS, and the points you're making are very valid, then you have all these programs built on, all these smart contracts and all these other things that we've now, it's blown up into everything from DeFi to NFTs to whatever. I'm not sure if they're all built on Ethereum. I don't think they are, but a lot of shit has been built on Ethereum. So I haven't seen much built on Bitcoin. So why has there not been more of an explosion in smart contracts and the understanding that Bitcoin can be an underlying OS for all these applications?
Well, you don't really need an underlying OS. The world doesn't need some sort of OS. And if it did have an OS, it should be decentralized. But there are things built on Bitcoin, but they're not the same scale as Ethereum, simply because the Silicon Valley money machine is not investing in companies building on top of sound money. Silicon Valley itself does not understand sound money. They don't even understand gold, barely. What they're interested in is a quick turnaround and a quick gain on their investment. Like, if you watch the All In podcast where you have Chamath and David Sachs and those guys, they're all talking about Solana and pumping their bags, right? But what the VCs want is super fast liquidity and turnaround on their investment. And they can achieve that through investing in these token projects that have no real purpose or utility. It's just an easy way to dump on retail investors. So they don't need to wait 7 to 10 years for a company to go public. They buy Solana in a pre-sale at a discount and sell it to retail investors, and then they're good, right? So this is why there's such a big push for all of these projects and smart contracts, right? At the end of the day, you're building smart contracts which are not necessarily immutable or or unchangeable because they build backdoors into them. If you Google smart contract backdoor, you'll see a lot of these smart contracts, they say, code is law and they've written their rule set in here, but then there's like an access point where they can shut it off. And just like a 5-minute Google will show you there's so many of these cases, and all of them are very unsecure. If you Google DeFi hacks, you'll find pages and pages of hacks. Every week there's a DeFi hack because they're just building JavaScript constructs that are unsecure and have backdoors and centralized. So this is why none of this is really meaningful. Even a smart contract itself needs some sort of input. It's not like a smart contract will just run on its own. If you go back to the simple example of buying real estate, there has to be some proof that the transaction happens, and then the funds are transferred, right? So there's always some input into these things. But the bigger problem is you're building smart contracts and DeFi stuff that is just relying on trading governance tokens or worthless tokens like fruit, dog tokens for other dog tokens and other governance tokens. So it's really a house of cards where you're staking some governance token to get another governance token to trade some other governance token. At the end of the day, none of the governance tokens even are meaningful because they're centralized, and it's a small group of people that's going to decide regardless of the governance token's direction.
As we wrap up, it's clear that Samson Mow is doubling down on his no-nonsense stance. Bitcoin is the apex asset, and everything else, Ethereum and the rest of the altcoin market, simply can't hold a candle to its utility, security, and scarcity. According to Samson, the future belongs to Bitcoin, with everything else struggling to stay relevant in the grand scheme of things. What do you think? Are altcoins truly destined to fade into obscurity, or do they still have a role to play? Share your thoughts in the comments below. And before you go, don't forget to smash that like button, drop a comment, and subscribe to the channel for more unfiltered takes, cutting-edge insights, and expert predictions. Your support doesn't just grow this channel, it keeps these vital conversations going. Thank you for watching, and we'll see you in the next video.